Good afternoon, traders. I hope you're all having a wonderful weekend. I have some free time now. I just came back from a walk, so I decided I'm going to do a very fast review on all the trades I posted, all the flash trades I posted for you guys. And like I said, I hope these short trades are going to help you to get, to understand wave analysis a little more. So let's look at the first one I posted. The very first trade I posted for you was the CADJPY. When I posted, the trade was here. And I said, you can put your entry here. You can wait for a small flag, put your entry, it comes here. By rule, if the trade doesn't go this much, you get out of the trade, right? You should have put your entry here. It went up, and then your entry could have come here. This would have been a break-even trade because it goes back up. It takes you out for break-even. It goes there, and then this entry still works. I'm not sure you have the ability, a lot of you have the ability to understand patterns, but if you understand that that pattern has a probability of coming down, if you could have seen the flat that it was making here, then you would probably want to get into the trade somewhere here to the downside. But it doesn't matter if you got the trade here even. It came down here, you take off the trade. Remember, once you see that big flat in the middle with a 1, 2, 3 pattern, the probability of this going back here becomes very high because the impulses up are sharp, the impulses down should be sharp. So there's a high probability that this week, you might even get a buy setup for this trade if you want to take it. Again, that's a big risk. You're buying, the bigger trade is going to be to the downside. There's no question about that. You watch the pattern and the bigger trade is going to be to the downside. There are times when trade like this would probably go higher, much higher before they come down. So if you get a flag here for a buy, if this week we get a flag here for a buy, this is how we would take. We would watch the flag here, we'll take the trade. It comes to the top, you would put that into profit because from there we will be looking for the sell setup. If it goes higher, good for you. You just keep moving your stops until you're taken out, and then we would look for a flag and a sell to the downside. This is going to happen, right? That happens all the time. So it's just a matter of when it's going to happen, how complex this pattern is going to get. I remember when it was at this level, some people start to freak out. Oh my God, look, it's going up back. Well, there's a reason we call this wave analysis and not straight line analysis or not support and resistance or not any other of the nonsense out there, because it moves in waves. So like I always said, it's not difficult, but it's complex. You see an impulse, you get a correction. There is no telling how complex this correction could be. And I mean complex. The corrections become complex, but eventually you get the impulse. So if you understand wave analysis and you can take advantage of this, great. If you don't understand and you don't know wave analysis, then you should learn it. Don't just jump to conclusions. Take, for example, the XRP. This was the second trade I posted for you. Remember? It was in here. And when I posted the trade, it was kind of, this piece was going up. And I told you, let's go back to it and look at it in details. It was in this piece here going up when I posted this piece. And I told you there was a chance this was going to come back down before it goes. My trader took the trade here, got break even from that trade down. And then we took the trade in this one going up. They got break even in this trade. They got break even in the second trade. It was the third trade from this point that they got. So there were 3 break even trades before this trade took off. And then the next trade. And then when it hits the top here, there was another trade here. This one became a break-even trade. Not on the first pullback, but in the second up move. That became a break-even trade. So if you kept this trade, if you kept this trade and you kept this trade, you should take them off here. Because once we saw this, we knew that this was going to go make a bigger correction. What that means, you're getting an impulse, you'll probably get a correction here. You get another impulse, you create a wave here, and then you go. It's wave analysis. It doesn't go in a straight line. And you go back and look at the charts. How far this thing is going to look, how many waves you had in this piece going up. It goes up, come down, goes up, come down, goes up. And that's the whole point of how it moves. Is this going to go there? There's a very high probability of that. I don't know that for sure. But we have a strategy to protect you. You take profits. If it's not going the way you want it to go, you get out for break even or you take profit. That's strategy. That's not the analysis. What I'm giving you is the analysis. By the way, I'm planning to do a 5 series of educational video explaining, it's not training you, right? These are not training videos to know wave analysis. These will be videos that will explain how Forex works, how you should trade, the things you should do to trade. If you're interested in it, don't forget to send me a message on Skype. I'll probably do it. If I get enough, yes, you're interested in it, I'll do that. It's going to explain the mechanism of Forex, how it works and how you should look at it, how you should take advantage, what you should do. So let's go. S&P 500 was the third one I posted. And I saw a few people freaking out about this one. I think I made this very clear that it could break this top. That does not negate this from being a corrective structure. If we break this top, then it will come back here and it will go back up. If we don't break the top, then the chances of this going down very deep is very, very strong. And why you're looking at it that way? Because you're looking at this way. This is your first impulse. This is the correction of the impulse. That is not an impulse going up. It could be an impulse, but it will be an impulse within a bigger correction. And I told you this thing is going to stay here for a very long time. So there are trade opportunities. We're at the top of the move. You have an impulse coming down. There's a very high probability, even if you break that top, you're going to get another impulse here. And then you'll go break the top, and then they're going to come down. The down move, this down move, I'm not expecting it to be very sharp. Now, I could be wrong because you could get one impulse, two impulses, three impulses, four impulses, and then you get the big correction. And then you repeat the structure. You have to understand and know these structures. So what I'm trying to show you is that you want the big move to the downside, not the very little move in that small thing at the top. There were no reason to freak out if it doesn't go. You didn't lose a single cent. If you have a good strategy, in the first case, you were not in this trade. This wasn't a trade. It just consolidated and go. If you took that, that's break even. It comes here, like I said, if you want to buy that, that's okay, but that's not a buy because you should get break even in that trade. It consolidate. You want to buy here? Good luck to you. Try buying at the top of a correction like that and see how it goes for you, because you don't know that they're going to make one more. But by the time this correction happened like this, we saw that on Thursday, Friday, that it's going to likely go back up one more. So if you sold here, you got out of that trade, like you had hours, days to get out of the trade, not only hours. I'm on the 4 hours, so there are days you had to get out of that trade. It's going to make a new high. We would look for the sell opportunity again. We repeat the process. You repeat the sell process because the move to the downside is the bigger move. That's the risk to reward trade. If you take a trade here, there's no risk to reward to that trade. And that's going to be one of the lessons I'll teach you if you want the lessons. So basically what you're going to look for here, is it going to go break the top? I don't know. I'm not interested in the buy. That's the whole point. I'm not going to be in the buy. I wouldn't be in the sell, but I'm not going to be in the buy because buying at the top is risky. It's pretty risky to buy where you're coming back into the top of the impulse because you don't know whether it's going to be a running flat. So this trade is still valid, except it's going to take a little longer. You wanted to finish this move, you wanted to make an impulse down, you want a small correction, and we would look for the sell. Let's see if we get it. I don't know if we're going to get it. Remember, Ripple didn't go immediately, but it eventually went. CADJPY didn't go immediately. Remember, CADJPY, I told you this is going to come. It didn't go immediately, but it eventually came here. Now we're expecting it to go back, and this is going to happen. You will see. You can track them. I'll keep updating them for you. Let's go to, as we finish S&P 500, the yen. The yen is the next one that I did. And what I told you is we're looking for this big move up here, that big move up there. Now, did I say this could probably crawl its way back to the bottom? Of course. Am I looking for that little sell there? You're talking about that. No, I'm looking for this risk to reward, the one that is going to give 5 to 1, 10 to 1. So let's go to the 1 hour. And on the 1 hour, we said, I told you this piece is going to come down. If you want to sell, you can take it, but it's very risky. It might just come here and go back, or it might even come test the low and then go. Right? Well, it came here and go back. If you took the trade, that's break even. Not the best trade. If you took it, it's break even. We were expecting that this could break out. That didn't break out. Okay, they came lower. We got a more complex flat. They're going lower. Is this going to go? I don't know. But if we get a buy setup here, we'll buy. That means that if you see a flag here, sorry, this is still in the correction, right? So if you see a flag here, Monday, that is a buy. If this buy only comes here slowly and drop, you get out for break even, you let it drop. It gives you another buy setup, you take the buy. It comes here and it drop, you take your trade out for break even, let it drop. Eventually, one of this is going to go. So if you get 3 break evens in here or 1 lost, or even 2 small loss, you're losing 2% of your account, you're going to make 10% of your account to the upside. As long as you're using good money management. That would be a second lesson that I would do. One is risk management, one is money management. I wouldn't be teaching you risk management and money. I'll explain the mechanism of it and what you should know. Now, if you want to learn risk management, that's a different story. I'll explain the mechanism of how it works and why it's important. So teaching it and training you to do it is a long process. It's not a 10-minute video. So we're going to look for this to come up here. are we going to get it from this, or is it going to go break the low first? Is this going to come break the low first and go? I don't know. But I would take that trade. Let me show you that trade from the top coming down so you understand what we're looking at. So let's say you were, I'll have to put it on the daily because I want to find the top of the impulse in the daily, right? The top move. So let's say you were in this move here, the first move down, this one. Or we can even start it from the very top, which is the very first impulse, right? See this impulse here going up? This impulse is the equivalent of that impulse coming down. And we were in this impulse here, and I saw this flat here. You know what I would say to you? If you get a sell set up in here or a sell set up in here, take that trade because we're going to get one of this coming down here. The first entry you made would probably be very small profit, not break even. That's enough pip to give you small profit. But then what happened? It goes up back. And you could freak out. You could say, oh my God, look what happened. We just looked at it and said, well, we've got ourselves a bigger correction. Let's sell it from here. This was not a good sell because this was a contracting flat. You would not get a sell there, but you'll get a sell here and you'll get a sell here and you'll get a sell here. But guess what happens when we broke this low? We called the buy back to the upside. We thought we were going to get this impulse, that this is going to go back to the top there. And that is pretty normal. You're expecting that to do. So if you bought here, there were 3 buy attempts here before you get that trade. And then it took you out here, and then you got another one, and that one took you out, and then it pulled back, and then you got another one, and then that. And by that time, we realized that this is going to come back down. So this was a sell setup in here. This was your first sell setup. Not the top. The top was a contracting flat. This was a contracting flat. The first sell came in here, and that turned out to be a very good one. And then we bought that back up. And by then, we realized this is going to be a bigger correction. This we believe is the final drop. Not necessarily the final drop, but we believe it is. Can this work its way down back to the low? Possible. I don't see that in here. For that to happen, I don't see that pattern developing as yet. But if they do develop that pattern, if eventually this goes back here and then start to drop, we will relook at this corrective structure in here and maybe then consider whether we're going to sell it to the bottom. But for now, we're going to be expecting this to go up because we're not looking for a much more complex pattern in here. We're expecting this to break out of this and actually come here. But I'm not sure that this is the one that is going to go. Remember, we thought this one was going to go because every time you have a simple pattern, you would look for the next impulse. That pattern could become complex, more complex, a little more complex, and a little more complex. It could spend a year there. It could spend 3 years there. It could spend 5 years there. This correction started when? In 16, December 16. Right? So don't count 16, count 17, 18, 19. We're in 20. We're going to approach December 20. We're going to approach 4-year corrections in here. What are the chances that after 3.5 years, they're going to take off to give you that impulse? See? So you want to focus on this because that impulse is coming. And that means if you get a trade here with a small thing, this could be look how this thing took off. See that? It consolidated here and look what happened. That could be a very, very good trade. So focus on the trade. Doesn't matter how much break even you get or how much attempts you make before you get the trade. Go for the trade because you will move your stop, put it to break even, and if it starts to go, it will never come back and take you out for break even. So focus on this trade. The next one I did was the one I showed you was in the US Norwegian krone. So when you look at this, this is a very similar to the yen, by the way. US yen, US Norwegian, very similar, except this one is a shorter correction because this is a much shorter correction, right? This correction is really small. And I expect this correction to go up not as an impulse, but as a correction, right? So let me show you the daily in this one. This is a move down. So we're expecting a correction up. So if yen is going to make an impulse to the upside, that is a daily impulse, we expect this to make a move up as a correction, pull back here, go back there, pull back here, go back there, pull back here. We expect a correction like this, upwards before this drops, again like that. So this will be going up as a correction, yen will be going up as an impulse. Which one you want to take? Now, what if yen doesn't become the impulse to the upside? I don't know that, right? So this is not a crystal ball game. This is a game about probabilities. You look at the patterns, you know how they behave, and you go for the one with the highest probability and the highest risk to reward. So I would take both of these right now are very good trade setups. If I have to choose, I'll probably choose the yen. But I'm telling you, both of them look very well. So this one, you took it, you move your stop to here. Remember, I said you wait for a flag here before you take the trade. Let's say you took the trade there. It goes up, it starts to come back. You get a break-even trade. You had enough hours to put that thing to break even. Put it to break even, take break even. That's a rule we have. It comes lower, no problem. You want to sell? No. Can it go break this low? Absolutely. Let it break the low, make another impulse like that, make another correction here, and you repeat the process to the top. It will not always go immediately, right? So if I was in this trade when it came to this top here, I would tell you look for a sell setup there. I'll put an entry here. It goes back up, it breaks that top, I'll put an entry here on the second one now. It goes break the top, I'll still put an entry here. You see this flat here? What did it do? It went and make another flat and then made a new high and then drop. Can this go make another flat here, make the new low and then go? I don't know. It's not about knowing exactly what you're doing. Remember, this is the whole thing about wave analysis. You look at the wave structure and you decide where the big trade is going to come, and then you look for your entry in the lower trade, on the lower degrees, on the lower time frame. I would leave these trades and I will keep updating them so you will know what happens to them and whether they go and whether you had a trade or whether you didn't have a trade set up, right? So even if you took the S&P sell, you got it for break even, that thing is in a consolidation for days. That's enough time to get the hell out of it because it's not going, right? We have rules on how our strategy works and whether we should get out of them. So watch these trades again, keep repeating the process. If you understand how to do it, if you don't know how to do it again, you need to train yourself to do this. You need the training to do this. Skype me. If you know how to do it, congratulations. You're on the right road. You're making money, right? So those are the 1, 2, 3, 4, 5 that I did. I'm going to try to do 2 or 3 more this week for you guys. But like I said, I want to do a series of 5 videos for you that are educational videos that may help you to understand how you should trade Forex, what you need to know to trade Forex. If you're interested in it, message me. And if I get enough response that you guys are interested, I would definitely do the videos for you. So thank you. Have a great weekend. Enjoy these reviews and plan for your week ahead. Take care, everybody. Thank you. Bye-bye.